My name is Andrew Stotz of the Valuation Master Class, and tonight we're going to have another presentation from one of our students. This is on semiconductor, and Priyanka is going to make this presentation. This is the culmination of maybe 400, 500 hours of work over roughly 12 weeks, valuing as many as 11 companies. Incredible journey that she's been on, and let's get her into the room and get ready to talk to us about the company. Priyanka, how are you?
Yeah, I'm doing good, Andrew. How are you?
I am excited to hear about. What's the name of the company that you're going to value?
On semiconductor?
Interesting. And I never heard of that company.
Yeah, it's a hidden gem.
Yeah, so I'm looking forward to it. So let me bring up your screen 1 second.
Okay.
Hold on. All right, perfect. It's on your screen. And I think we're now ready to go. So why don't you just test by going up, down, and then up again, just one page.
Yeah.
Okay, so try that again. Yep, perfect, perfect. Okay, so I think I'm gonna remove myself from the group, from this, and then you can start. You
Oh, okay,
okay?
sure.
So I'm gonna remove myself now, and then you just take over. Go for it.
Okay. Yeah. Hello. Good morning, everyone. My name is Priyanka Hegde. Before I begin, let me ask you, are you on? Yes, you heard that right. Today, I will be walking you through my valuation report on Semiconductor, the silicon whisperers of tomorrow. I initiate coverage on with a buy recommendation based on a target price of $97, implying an upside of 32%. I derive the target price from a DCF based valuation using a WACC of 11.9% and terminal growth rate of 2%. On Semiconductor Corporation, founded in 1992 and headquartered in Arizona. Their product portfolio spans intelligent power and sensing solutions with key offerings like SiC, that is silicon carbide for electronic vehicles, image sensors for advanced driver assistance systems, and power modules for renewable energy. On Semiconductor operates 20 manufacturing facilities holding a strong market position with 70% revenue from automotive and industrial markets. Its silicon carbide technologies enable lighter EVs, fast charging, and efficient energy solutions. Let's look at the key stories of On Semiconductor. First one, silicon carbide will propel On Semi to the forefront of EV and energy innovations. In 2023, SiC revenue grew fourfold, driven by its application in EV powertrains for lighter, longer range vehicles and efficient fast charging systems. To meet rising demand, On Semiconductor expanded SiC manufacturing capacity in Hudson, Rožňov, and Czech Republic. They are also developing advanced SiC based projects, including wide bandgap MOSFETs. They are like transistors that control electrical current flow with high efficiency, a $14 billion total addressable market. So, I forecast On Semiconductor share of 25 to 30% in the SiC technology market by 2025 as a key supplier for EV and sustainable energy solutions. Next one, onsemi is agile and prepared to handle slowdowns while embracing future growth. On Semiconductor's Fab Right strategy consolidates manufacturing into high efficiency facilities like East Fishkill, which is in Newark, the largest US site for 300 millimeter power discrete and image sensors. With 500 plus products in vehicles and 600 plus customers, including Nvidia, Samsung, Volkswagen Corporation, Tesla, and Bosch. it demonstrates the broad market reach. This strategy streamlines operations, reduces costs, and boosts resource allocation, driving 1.4 billion US dollars in third quarter 2024 operating income with a 25% gap operating margin and 45% gross margin. I would project these initiatives position the company to navigate market challenges effectively while laying the groundwork for long-term growth. My third story is on buybacks. Buybacks reinforce on semiconductors' focus on shareholders' returns. On semiconductor return 75% of its free cash flow to the shareholders through stock repurchases over the past 12 months. The company achieved a 41% sequential increase in free cash flow, enabling continued buybacks. Its strong liquidity position with US $2.47 billion in cash and cash equivalents as of third quarter 2024 supports the sustainability of this strategy. I would project that this strategy will continue to enhance on semiconductors' focus on maximizing shareholders' returns. Overall, onsemi is mastering silicon carbide, scaling smart, and rewarding shareholders. Let's move on to the recent quarterly results. On Semiconductor demonstrated strong performance in third quarter 2024 with a slight revenue increase quarter on quarter supported by stable cost management. EBIT also improved, driven by reduced unusual or foreign exchange gain or losses. Margins recovered notably. Additionally, the company's core profitability remained strong as indicated by steady EBITDA growth. Coming on to the constraints to this company, strong operations minimize on semi's growth constraints. Despite a US dollar 1.5 billion debt offering that reduced the long-term debt by 16%, capital expenditures also rose sharply in 2023. It highlights the business's reliance on large investments and sustained cash flow to meet high capex and working capital needs. On semiconductor is not highly dependent on specific products or clients, with no distributor exceeding 10% of 2023 revenue. As far as constraints to market and people are concerned, on semiconductor operates in a competitive mature market with a focus on automotive and industrial sectors, which made up 80% of its 2023 revenue. It faces strong competition from companies like Infineon and Texas Instruments, particularly in the SiC segment. And on semiconductor relies on highly qualified labor, especially for its R&D. The company faces high competition in attracting skilled talents, particularly given the industry-wide demand for expertise in advanced semiconductor technologies. Moving on to the revenue breakdown of the company, in 2023, on semiconductor generated around US $8 billion in total revenue, led by Power Solutions Group, that is PSG, with 54% of its total revenue. The Advanced Solutions Group contributed 30% of revenue, and the Intelligent Solutions Group, ISG, accounted for 16%. Geographical wise, major revenue contributors are Hong Kong, Singapore, and UK. Considering the FVMR framework, even though on semiconductor ranks the worst in the peer group of 1,810 non-financial companies in the USA, the company has strong profitability metrics, with its operating and recurring net margins marking near the top in past 12 months. On semiconductor has strong liquidity. As you can see, the current ratio is high and a low net debt to equity ratio. Coming to the Porter's 5 forces, Um, Overall ranking is 56%, with rivalry among the competitors is 53% because on semiconductor faces significant competition, including major players like Infineon, Texas Instruments, ST Microelectronics, and Wolfspeed in power semiconductor and analog markets. Bargaining power versus suppliers and versus customers both scores around 40% because certain key inputs such as silicon and silicon carbide wafers are critical for onsemi, and they are subject to supplier control due to limited availability and specialized production. Barriers to entry are very high, scores around 87% due to the extensive capital investment, technical expertise, and established supply chains required. Threat of substitutes comes around 60% because the customer switching costs are relatively low, especially in cases where customers can substitute products from different suppliers without extensive modifications. Moving on to the leadership, Alan Campbell is the chairman and Hassan Al Kauri is serving as both the president and CEO. Percentage of total shares held by the insiders are only 0.33%. Top five institutional holders are Fidelity, Vanguard, BlackRock, State Street, and JP Morgan Chase, respectively. Number of the total directors are 10, which is a bit less than US and Asia average, but the number of the independent directors count 9 more than US and Asia average. Uh, Coming on to the WCB, on semiconductor ranks well among 630 large infotech companies with strong profitability but room for improvement in growth. Profitable growth rose to rank 1 in past 12 months. Profitability improved to rank 1, reflecting enhanced efficiency, and expense control ranks highly at rank 1. On Semiconductor achieves an outstanding 100% ESG score. Its robust environmental initiatives, including resource efficiency, renewable energy targets, and innovative eco friendly products, position the company as a sustainable leader. On Semiconductor excels in social responsibility with strong health and safety measures, human rights policies, and anti corruption initiatives, ensuring ethical business practices. On Semiconductor demonstrates strong governance practices with an independent board structure and transparent shareholder rights policies. Coming to the financials, um, I believe the revenue growth of around 13,000 in millions and net profit of 3,000 for on semiconductor until 2028, and it is supported by its strong focus on automotive and industrial sectors driven by expanding silicon carbide market share. The company's quarterly investor presentation, that is third quarter, outlines a target gross margin expansion to 53% by 2027. I expect net fixed assets to grow steadily to 8,000 by 2028 due to on semiconductors continuous expansion of manufacturing facilities such as the East Fishkill site, which is in New York. Next, uh, long-term debt to reduce to around 1,200 by 2028 because on semiconductor has been actively paying off its debt, including repaying 120 million of notes in 2023 and replacing older loans with a better financing options to reduce future interest payments. Next, capital expenditures. Consistent growth in capital expenditures to reach around 1,600 by 2028, driven by focus on global manufacturing facilities. Current ratio to remain around 3 to 3.5 in 2026 due to on semiconductor strong cash generation and effective management of its short-term liabilities. The gross margin of 48% is expected as a result of improved manufacturing efficiencies. FCFF and FCFE are also showing consistent growth trend. Coming to the relative valuation, ON looks relatively undervalued compared to USA, the world, and Asia ex Japan with a PB to ROE multiple of 0.11 in year 2025 estimated year. On semiconductors, PE ratio for 2025 is notably lower than global and US averages, reflecting attractive valuation levels. In order to arrive the target price, I assumed a 2.5% risk-free rate for the US market, reflecting stable government bond yields, and 8.5% equity risk premium, consistent with historical averages for developed markets. I incorporated 2% terminal growth rate. It yields an equity value per share of US dollar 97 according to the FCFF method. Key point here in sensitivity analysis is if the terminal growth rate increases by 1%, the value rises to US dollar 105. If the terminal growth rate decreases by 1%, the value falls to US dollar 90. Lastly, risks. Rapid technological changes in the semiconductor industry require continuous innovation. Failure to innovate could render on-semis product obsolete. The semiconductor industry is highly competitive with frequent mergers and acquisitions. Larger competitors with better resources may outpace on-semi. Delays or inefficiencies in scaling SiC production could limit on-semi's ability to meet growing demand in automotive and industrial markets. Then Fab Right. It has recently transitioned from Fab Light to Fab Right. Actually, Fab Right is where critical manufacturing is optimized and retained in-house as compared to Fab Light, where most manufacturing is outsourced. Any missteps in execution or unforeseen costs in this shift could disrupt operations. That wraps up my valuation report on semiconductor. Again, I initiate coverage on with a buy recommendation based on a target price of US dollar 97. Let me leave you with this. It's time to stay on. On semiconductor is not just shaping the future, it's powering it. Thank you, one and all.
Way to go. All right, let's go through some questions. My first question is, why do you think this company is so cheap when it's in the right industry? Its profitability is strong. Its growth has been pretty good. What do you think's holding it back from getting the big valuations like the other companies?
Yeah. OnSemi makes vertical integration in silicon carbide chips. I think which are better than regular silicon for handling high power and heat. And these chips are mainly used in electric vehicles to improve the driving range and charging speed. OnSemi stands out because they control the entire process from making SiC crystals to finished chips, ensuring high quality and steady supply.
So would we look at this company and say it's really just a well-run supplier, as opposed to, let's say, an end brand, or a leader like Apple is an end brand, or Intel in the past has been a big name? How do we view this company?
Actually, OnSemi is well diversified across multiple high growth markets, including automotive, industrial, and energy infrastructure, reducing its reliance on any single sector. Actually, its product portfolio spans intelligent power and sensing solutions, and image sensors for ADAS, advanced driver assistance systems, and power modules for renewable energy. It is the thing that drives.
Mm. Let's look at some of the questions. This is a question from Aswin. He said, I might have missed it, but is this a fabricator or a designer or something else?
It starts from manufacturing SiC crystals to finished chips. Entire the process is handled by on semiconductor.
Okay. And another question from Umesh says, what's the reason for the CapEx? I know you talked about the expansion, but maybe you could just highlight what you think is the one area that will drive the majority of that CapEx.
Actually, they are expanding manufacturing facilities. They recently transitioned from Fab Light to Fab Right. It is in New York, onsemi's largest US manufacturing site and only facility in the country producing 300 millimeter power discrete, which are essential for electric vehicles and industrial automation. Uh, these are the reasons for the capex expenditures.
Okay. And Momin asked the question, given that most of their revenues come from Asia, what about the competition with TSMC? Or is it true that most of their revenue comes from Asia?
Yeah, most of the revenues are coming from Hong Kong and UK.
And
Yeah,
so what about competition with TSMC?
yeah. Actually, on semiconductor is mainly about producing the silicon carbide as compared to the TSMC.
Okay. And Momin asked one question, which was, why do you expect a drop in ROE?
Uh, no, I don't expect ROE to drop mm, because on semiconductor. Okay, 1 second.
Yep, take your time.
On comparing with the average industry ROE of 11%, the company's ROE looks, I think, pretty remarkable because our on semiconductor has seen exceptional 43% net income growth in the last 5 years compared to the on semiconductors net income growth with the industry. And pleasingly, I found that the growth seen by the company is higher than the average industry growth of 20 to 21%.
Excellent. So how does it feel to graduate from the Valuation Master Class?
Yeah, I feel really good actually. I feel awakened after graduating from the Valuation Masterclass Professional. I understood the strategies behind the valuation. In just 6 weeks, I have valued 9 companies across different sectors, including mining, tourism, and semiconductors. And this journey has helped me step out of my comfort zone and explore the new markets. And I'm excited to apply these skills in my future work.
Mm. And how would you describe what you know now compared to what you knew at the end of boot camp?
Yeah, when I started the valuation masterclass, I thought the workload was very challenging. However, when I moved on to the valuation professional program, I realized it was 3 to 4 times more demanding than valuation masterclass. And surprisingly, the value I gained from it was also 3 to 4 times greater. The depth of the knowledge, practical insights, and skills I acquired, I think they are truly worth.
And maybe you can give an example, like what's a type of skill that, that you could see that you were able to really improve in Valuation Masterclass Professional?
Yeah, one of the examples is peer evaluation. Uh, in order to give the peer evaluation, we have to look into the background and insights of the companies they are valuing, not just the ones I worked on. And this helped me to understand the different industries and how company specific factors affect the valuations. It also improved my knowledge on valuation concepts and gave me a broader perspective.
And you said something when we talked previously in one of our calls about how you feel if you didn't learn something each day in the world of finance. Maybe tell the world about, your passion there.
Yeah. Um, Actually, I'm very I'm very interesting about reading the facts about the finance industry. Daily, I read about the logs about the finance, and I will look into the Yahoo Finance and also Seeking Alpha, and I will trade in US stocks and derivatives currently.
Fantastic. Well done. I want to congratulate you on making it. Very few people can make it all the way to the end of Valuation Masterclass. That's boot camp and then professional. I suspect you spent probably 400, 500 hours of time working over 12 weeks. So really a major accomplishment. So well done.
Yeah, thank you.
All right, I'm going to take you out of the group and then I'm going to talk for a minute or two, but really awesome. Really
Yeah,
awesome.
yeah, thank you, sir.
Yep. How about that? I mean, I never heard of On Semiconductor, so that was interesting to me to learn about the company and try to understand why it's not trading at such a high multiple as the others. I would say part of that's it's an industrial supply company that's supplying the right industry, therefore it should have growth. But yeah, that was amazing. I would say that Priyanka really did a great job with that. If you want to build a competitive advantage in company valuation, why not join us at valuationmasterclass.com? I'd love to see you there.